Happy July, everyone, and it's great news. We are halfway through winter and we've had a very dry winter with a few cold days, but it's been mostly sunny. So the weather forecasters have done a good job so far. Touch wood. Now, I'm Stephen Garay from First National Connect, an 11 times Rate My Agent, a Suburb Agent of the Year winner, and I welcome you to my market update for July 2023. Now, the information I speak about is available from CoreLogic for your information. Now, great news for Sydney home buyers. The Reserve Bank yesterday left their official cash rate at 4.1% for the month of July. So that came as a little bit of a surprise to me. I was expecting an interest rate increase of 0.25% or 25 basis points, but they left it as is. So this will make it interesting to see what happens next month with the Reserve Bank. But I suspect there's going to be more interest rate increases to come. As much as I don't want them to come, and a lot of people don't want them to come, I suspect there's more coming before the end of the year. Now, great news also for Sydney home sellers, with an increase of 1.7% in the Sydney house values last month, bringing it to a 6.7% increase in house values since January this year. So Sydney house values have gone up 6.7% since January this year. Now, what that translates to in dollar values, well, since January this year, Sydney house values have gone up $4,262 per week, bringing the Sydney median house value to $1,073,294. So every week since January, Sydney house values, or the median house value, has gone up $4,262 per week. Crazy, crazy, crazy. Now, this continued growth in the Sydney house values, I think, supports my belief that buyers are comfortable with buying in an environment where there is high interest rates and high inflation. So they're still buying, which is why we're seeing prices still going up. And really, it's a lack of supply that's been the main factor that's been driving housing values up. The number of capital city homes advertised for sale over the 4 weeks leading up to June 25th is 20% lower than it was for the same period last year. So the 4 weeks leading up to June 25th this year is 20% down on volume of new properties on the market in capital cities than it was the same period last year. So low supply. And obviously, on the other end of the spectrum, the capital city house sales, or the volume of sales, is estimated to be 2.1% above the previous 5-year average. So leading through to the end of the quarter of June. So in other words, house value volumes have stayed pretty steady, but the supply has dropped, and that's what's driving up the prices. So what do I see happening in the city property market for the remainder of winter? Well, after 5 months of growth, the biggest factor moving forward that will impact the city property market will be the trajectory of interest rates. Okay, so that will have the biggest impact on supply and demand, and obviously house values. However, that said, for home buyers, I still see a great opportunity to be able to buy a property before prices increase and interest rate increases. So for Sydney home buyers, buy now before prices and interest rates go up. For Sydney home sellers, I see an opportunity to capitalise on the current market and to sell while prices are going up because of low supply. Okay, so for Sydney's home sellers, sell now while there's not a lot for sale, and capitalise by getting a better price than you potentially would down in the future. Okay, so look, if you've got any questions about anything I've said today on the July 2023 market update for Sydney, please let me know. I'm Stephen Garay from First National Connect, and I thank you for tuning in to my market update for July 2023, and I look forward to catching up with you next month. Thank you.